this has not historically been have predictive value. We're looking at profit margins and earnings growth and sales growth at all-time highs, leading economic indicators. And the coincident indicator, everything is sort of foretelling stronger for longer. And so for us, we're watching nominal GDP, which is up 7.5%. That drives corporate revenues, and that ultimately drives wage growth and productivity. So that's what matters to stocks over the long term, much more so than the length. And as you can see, we don't really know what the length is, right? I mean, you have to back out a number of 19.9% decline. So we're much more interested in what's driving stocks, earnings, and revenue growth.
And Kirk, we're less than 1% from that record high hit earlier this year in the S&P. Are we going to break through that? And if so, what are the risks out there that you're watching most closely that could derail this market right now?
Well, I think we definitely could break through it. I think we're testing the January highs. I think it's possible we get to the 3,000 level in the S&P. What I am worried about a bit is where we are going in terms of interest rates, and I'm watching the 10-year Treasury very closely. Had a nice rally in the 10-year from 3% down to, what, 282. So I think as long as long-term rates stay low, that's a good thing. The other thing that gives me pause is that institutional investors are very much looking at non-correlated assets, which tells me they're a bit concerned about valuation and they want to diversify.
What would you do, Kirk, if the S&P 500 did hit 3,000? Would you buy more? Would you lighten up? Would you just let it ride?
Well, I think what you do is you lengthen your time horizon. What I'm concerned about is that everybody is very much long tech stocks and they're long bonds, and they have a lot of duration risk. So I think what you have to do at that point is to say, what's my time horizon? I wouldn't be buying things for the short term, and I've got to say, I want to own things for the long term and expect the volatility.